Justoken has tokenized over $2 billion in electricity production on the XRP Ledger. This is not a synthetic token or a yield-bearing DeFi product. These assets represent actual energy being generated and delivered through physical power grids. Each tokenized unit is backed by real electricity output. This marks a significant milestone for the XRP Ledger as it moves beyond speculative use cases into real-world infrastructure applications. The tokenization of electricity on XRPL creates measurable demand for XRP. Every transaction involving these tokenized assets requires XRP to pay network fees. Additionally, new accounts and trust lines formed for these assets lock XRP reserves, reducing the circulating supply. This dynamic introduces a structural demand for XRP that is not speculative, but tied to the physical movement of energy. The XRP Ledger is being used as a bridge asset in native decentralized exchange (DEX) trades. Tokenized electricity assets are being bought and sold on XRPL, and XRP is facilitating those transactions as a settlement layer. This positions most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. XRP not just as a fee currency, but as a liquidity bridge for real-world asset trades. This development is significant because it represents a shift in how blockchain is being used in commodity markets. Instead of tokenizing financial instruments or synthetic assets, Justoken is tokenizing the actual commodity itself, electricity. This has tangible economic value because it allows energy producers to tokenize and monetize their output on a global, decentralized ledger. The XRP Ledger is now hosting tokenized electricity assets worth over $2 billion. That's a milestone in blockchain infrastructure. It shows that the XRPL is being adopted not just for financial transactions, but for managing and trading real-world assets at scale. The tokenized electricity assets are not tied to any specific jurisdiction or centralized authority. They are digital representations of energy output that can be traded globally. This creates new opportunities for energy producers to access international markets and for investors to gain exposure to energy production without needing to own physical infrastructure. 1. Of the key implications of this development is the long-term demand it creates for XRP. As more tokenized assets are added to the XRPL, the need for XRP as a fee currency and liquidity bridge increases. This is not a temporary spike in demand. It's a structural shift in how the network is being used. The next signal to watch is how this tokenization model scales. If other commodity markets begin to adopt similar models, the XRP Ledger could become a central hub. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For real-world asset trading, this would significantly increase the utility and demand for XRP across multiple functions on the network. The tokenization of electricity on the XRP Ledger is a major step forward in blockchain adoption. It shows that blockchain can be used to represent and trade physical assets in a way that is transparent, efficient, and globally accessible. This is not just a technical achievement. It's a shift in how we think about blockchain infrastructure and its role in the global economy.